6 months ago, Greg had zero in his funded trading accounts. Last month, he withdrew $10,243. And here's the twist. This guy who just withdrew 10K plus from his prop firm accounts, he works on an oil rig. No manual trading. He can't even execute manual trades because the satellite connection is too slow. And here's the kicker. He was only targeting 3% per month, not 50%, not 20%, just 3%. And if you're time poor, or you've been burned by manual trading and you're sick of all the guru noise, this is the edge that retail traders never use. So keep watching because I'm about to show you exactly how he set it up and how you can copy exactly the same framework. So let me tell you about Greg because his story is probably your story. During COVID, stuck in an apartment for months, he started to learn how to trade. Technical analysis, chart patterns, indicators, all of it. And he lost. He lost a lot. Not because he was stupid or didn't know enough. He lost because he's human. Listen, 89% of all traded volume in 2025 onwards is algorithmic. In other words, it's run on systems. The institutions figured this out decades ago. Retail traders are still using chart patterns from the 1980s and wondering why they can't compete. I'm Reese and I teach time poor professionals how to build custom portfolios of automated trading algorithms. In 30 days, my clients have their very own systematic trading portfolios generating 2 to 5% monthly returns with minimal screen time. I'm not a Wall Street quant. I'm not some financial guru. I'm just someone one step ahead who's great with systems. And the systems we build now power hundreds of funded accounts and generate consistent payouts for traders who simply don't have enough time to sit in front of the charts. So you can keep strategy hopping for another decade, or you can learn what Greg did, an offshore oil rig worker with zero coding experience, how he built a system that generates consistent income while he sleeps. So by the end of this video, you'll understand exactly why manual trading is a losing game and what to do instead. So here's the thing most people won't admit. 95% of retail traders fail, not because they lack the knowledge, not because they haven't taken enough courses. They fail because of emotion, fear, greed, impatience. You sit at the charts all day, nothing happens. You get bored, you force a trade. It goes against you. You hold too long, hoping it'll come back, or you cut too early because you're scared. Does that sound familiar? And here's what nobody wants you to hear. More learning won't fix this. Another course won't fix this. You can't think yourself into a new way of acting. You have to act yourself into a new way of thinking. And the action you need to take is remove yourself from the equation. This is where algorithmic trading comes in. Not because it's magic, not because it's the holy grail of trading, but because it removes the emotion from the equation. You build a system, you backtest it on years worth of data, you deploy it, and then you step away. The system executes. No greed, no fear, no second guessing, because the reality is nearly 90% of all traded volume in 2025 is algorithmic. The banks, the hedge funds, they've removed humans from trading decades ago. That's why they win. Greg figured this out the hard way. After losing lots of money trading manually, he realized something doesn't work. He works offshore on an oil rig in Africa, and when he's out there, the satellite connection is so bad that he can't even get manual trades approved. They get rejected before they even execute. The price moves and the trade fails. He's done before he starts. So he had two choices: give up on trading or find a way to trade without ever being there. And that's when he found systematic trading. Not day trading, not sitting at charts, but building systems that run while he's working, while he's sleeping, while he's living his life. Now, here's the part that changed everything for him. Manual trading in 2025 is like bringing a knife to a gunfight. You're competing against algorithms that execute in milliseconds, that scan for thousands of instruments simultaneously, that don't get tired, they don't get emotional, they don't second guess. And you're there with your laptop trying to spot a double bottom on a 50-minute chart. It's not a fair fight. And if you think discipline and willpower will save you, that's what I thought for the first 5 years of trading. Spoiler, it doesn't actually work. Systems beat emotion every time. So Greg made a decision. He wasn't going to try and out-discipline the market. He was going to build a system and let it do the work. And what happened next? Well, that's where things get interesting. 6 months ago, Greg had zero prop firm accounts, $0 in live trading capital. Last month, he withdrew over $10,000. So what changed? Most people hear 0 to 10K in 6 months and think it's hype. And honestly, I would have as well. And you probably should be skeptical. Most of those stories are survivorship bias. One person got lucky, blew up the next month. You never hear about them ever again. But Greg didn't get lucky. He did something most traders refuse to do. He went slow. he was conservative, and he diversified. And if you don't understand why that matters, you're going to keep chasing big wins and blowing accounts. Here's the thing about trading. The goal isn't to win every trade. The goal is to stay in the game long enough for your edge to play out. And the only way to do that is to protect your capital first and grow it second. Greg built his system on the 3 pillars. 1, conservative returns. He didn't target 50% per month. He targeted 3. 2 is diversification. He runs 21 different strategies across 3 different symbols. And 3 is risk management. He set his drawdown limit at 5%, not 10%, 5. When one strategy loses, the other one wins. And when the market is trending, his momentum strategies print. When the market is ranging, his mean reversion strategies take over. The result? A smooth equity curve, not a roller coaster. Some months he makes 6%, some months he makes nothing. But over 6 months, he's up consistently. Let me show you exactly what this looked like. So month 1, 2% return. Month 2, 4%. Month 3, break even. The market was choppy. Month 4, 5%. Month 5, 3%. Month 6, 6%. And that's when he had his first 10K payout withdrawn. Now he's got 4 more accounts in verification stage, 6 more in challenges. And here's his plan. Every time he gets a payout, a third of it goes to new challenges. Because if you can make $5 grand a month from 2 funded accounts, why can't you make 50 grand from 20? Now, here's what most people get wrong. They think trading is about doubling your account every month. It's not. That's gambling. Trading is about compounding with controlled risk. 3% per month doesn't sound sexy, but compounded over 2 years on 100K, that's 80K in profit. On $1 million in prop firm capital, well, you can do the math. And the best part? Greg doesn't sit watching charts. He doesn't watch every tick. His system runs. He checks it once a day, maybe once a week. He's got his life back. Now, I know what you're thinking. This sounds complicated. I don't know how to code. I'm not technical either. Well, neither does Greg. So let me break down exactly how this works and why it's simpler than you think. Algorithmic trading sounds intimidating. You see code, you see backtesting, you see technical jargon, and you think that it's not for you. But here's the reality. Greg isn't a programmer. I'm not a quant genius. You don't need to be either. What you need is a system that's been tested, that's been proven, that removes you from the decision-making process. Because every time that you interfere, every time you second-guess the system, you introduce emotion back into the equation. And that's when you lose. So if you don't understand how to build and trust the system, you're going to keep self-sabotaging. The institutions figured this out decades ago. They don't rely on humans to make trading decisions anymore. They use data, they use systems, and they use diversification. And now the tools are available to retail traders. Greg's system is built on 3 things. 1, diversification. 21 different strategies across many symbols. Some long, some short, some trade momentum, some trade mean reversion. When one loses, another one wins. And 2, conservative risk management. Most prop firms give you 10% drawdown. Greg sets his to 5%. Why? Because he wanted margin over error. He's not trying to get rich quick. He's trying to retire early. And 3, proven backtesting. Every strategy is tested on 6.5 years of market data. COVID, Brexit, all the tariffs that are going on, ranging markets, falling markets, all of it. You don't write code from scratch. You use plug and play frameworks and strategy templates. You backtest them, you optimize them for your risk tolerance. Then you deploy them and the system runs. So let me show you what this looked like for Greg in October. October was a tough month. There was tariffs dropped on Friday, markets went crazy, Greg's system lost 1% and another 1% the next day. But across his 21 strategies, it never exceeded 3% total drawdown and never came close to his 5% limit. Some strategies lost, some were break even, some actually won. That's diversification. One strategy would have blown up. 21 strategies absorbed the hit. The goal isn't to avoid losses, it's to survive them. And by the end of October, he was still profitable for the whole month. Now, here's what most people don't understand about algo trading. Greg's strategies have win rates between 30 to 60%. That's it. Not 80, not 90, not 99. Some of them lose more than they win. But the risk to reward is dialed in. The position sizing is controlled. And over hundreds of trades, the edge plays out. This is the difference between gambling and trading. Gamblers need to win every hand. Traders just need to win more than they lose over time. And one way to do that is to get out of your own way. Now, I know what you're thinking. This sounds too good to be true. Well, what about survivorship bias? What about overfitting? Good. You should be skeptical. Let's address that head on. Let's be honest, when you see 0 to 10K in a title of a video, your BS detector goes off. And it should. Mine does, because the internet is full of fake gurus selling dreams. And Most of those stories, they're either lies or survivorship bias. And here's what the research shows. Most high-frequency retail traders fail to match their back-tested performance. Why? Because of overfitting, curve fitting, cherry-picking data. They optimize strategy to fit past perfectly, and then it fails in live trading. So if you don't know how to spot this, you're going to waste months or years trying. You're going to waste months and years chasing systems that don't work. The difference between a good system and a bad system isn't the win rate, it's robustness. Can the system survive different market conditions? Can it handle drawdown without blowing up? Does it rely on edge or multiple edges? Greg's system passes all the tests. It tests on years worth of data, not 6 months, not 1 year, 6.5 years. We manage volatility, ranging markets, bull runs, bear crashes, all of it. And 2, it uses simple logic. Its strategies aren't complicated. Some use one entry model and that's it. Why? Because complexity breaks, simplicity scales. 3, it's diversified across multiple strategies and assets. And 21 strategies over many symbols, long and short. If one edge stops working, 20 others keep running. When you backtest, you don't optimize all of the data. You optimize on part of it. Then you test on the rest. And that's called walk-forward analysis. It's how you avoid overfitting. And when you deploy, you start small, you monitor, you adjust when you're needed. You don't just bet the farm on a day. Greg didn't make 10K in 30 days. He made it in 6 months. Month 1, he was learning, testing, building confidence. Month 2, first prop firm challenge started. Month 3, break even. The market was choppy. Month 4, he started seeing consistency. Month 5, 2 accounts funded. Month 6, first payout, and it's not luck, it's a system. And now he's able to grow and scale multiple funded accounts. So are you willing to do that in 6 months? Now, here's the part no one talks about. This isn't passive income yet. It isn't passive income at first. Greg still had to build the strategies, test them, deploy them, monitor them. It took him a couple of months to get his head around everything, to build portfolios that he trusted. But once they were running, he's offshore for a few weeks at a time, the system trades without him, and he checks it once a day maybe. So yes, it does require work up front, but what's the difference? The difference between where you are now and where Greg is, he acted. You're still thinking about it. So what does this actually look like for you? What's the path from where you are right now to a system that runs without you? Let me break it down. Here's the reality. You're probably in one or two places right now. Either you're manually trading and it's not working, or you're stuck in analysis paralysis, learning endlessly, but never executing. Greg was in the first camp. I was in the second. And the only way out is the same. You can't think yourself into a new way of acting. You have to act yourself. So here's what happens if you don't. You keep strategy hopping. You keep blowing accounts. You waste another year, another 5 years, another decade. Or you finally accept that humans are the limiting factor and you build a system that removes you from the equation. Greg's endgame isn't complicated. He told me something that stuck with me. This was never a get-rich-quick scheme. It's an early retirement theme. He doesn't want Lambos. He doesn't want flex on Instagram. He wants time. He wants freedom. He wants to stop trading his life for money. And algorithmic trading, that's the path. Here's what it takes. Step 1 is you start with the proven strategies. You don't reinvent the wheel. You use tested frameworks, strategies that have survived 6+ years worth of market conditions. Step 2, conservative returns. 2 to 5% per month is all that you need. It's not sexy, but compounded, it's life-changing. Step 3, you scale through prop firms. You start with 1, 2, you pass the challenges, you get funded, then you reinvest the payouts to get more challenges and fund your own accounts. And 4, so Greg's at the stage where he's managing 12 accounts right now. It takes him 10 minutes a day. And let me show you the math. 2 funded accounts at 100K each, that's 200K in capital. 3% per month on average, that's 6K. You keep 80%. That's 4,800 per month. Now scale that to 10 accounts, and again, you can do the maths. And you're not risking your own capital. You're trading with the prop firm's money. The institutions have been doing this for decades. They trade with investor capital. Prop firms finally made it available for the retail sector to do the same. The tools exist, the frameworks exist. The question is, will you use them? Now, here's the part that separates the people who make it and the people who don't. If you're thinking, I don't have time for this, well, Greg works on an oil rig. You're not busier than him. If you're thinking, I'm not technical enough, Greg isn't a programmer, neither am I. The difference isn't talent, not intelligence. It's willingness and commitment to a system and trust it. Because emotions are the biggest drawdown. And the only way to beat them is to remove yourself from the equation. So here's what I'm offering. Because if you're serious about this, I can help you build it. So if you're serious about building a system that runs without you, and if you're done strategy hopping and you're ready to commit, you can click the link in the description and you can book a call. On that call, we'll map out your custom portfolio, the strategies, the risk management, the prop firm path, and if it's a fit, I'll help you build it out within 30 days. No hype, no guesswork, just data and structure and proof. Greg did it, hundreds of my clients have done it, and the question is, will you? Imagine if 6 months from now, you're the one withdrawing 10K per month. You're not sitting at charts, you're not second guessing yourself, and you're not jumping from strategy to strategy. The system is running, you've got your life back, and that's what happens when you remove yourself from the equation. Systems over emotion, data over drama. So if you're ready to book yours, book a call. The link is below, and let's make it happen.